Trading psychology is a scam. Look at how many traders attribute their success to just technicals alone.
Psychology is a scam.
Wake up, Mark.
None of them focus on their mindset. Mindset is an excuse for having poor technicals. All you really need when you think about it is an edge.
Mark, wake up! Mate, you alright?
Yeah, I just had a dream I was a idiot.
So first thing we're getting into is strategy versus you. So could you just explain to me what this actually means?
Really simple. So my goal here is not to try and convince you or explain to you like this is more important than this or this is more important than this. What I mean about strategy and you is, do you need to know more about this or do you need to know more about this to be profitable?
Okay.
There are certain situations where one will be more important than the other. So I'll give you an example. Like imagine you're trading a strategy and you barely know anything about it. Yeah. Or like let's say your technical proficiency is quite average. Okay. You working on your mindset and doing loads of work on your mindset isn't going to fix your technical incompetency. Yeah. Only this would. That would be stating the obvious. Mm-hmm. Some people come to me and say, Mark, well, what's the point in having this incredible mindset if you don't have an edge? And I'm sitting there thinking, who on earth is walking around thinking that you just need this? Like I've never met anyone that said to me, Mark, do you know what? I don't think you need an edge. You just need a great mindset. So that scenario doesn't exist. Mm-hmm. That's like saying to someone, what's the point in having this macro diet and this food plan and everything all dialed in if you don't go to the gym?
Yeah.
That's the given. Surely you know you need to go to the gym. You know you need an edge. Yeah. So once you've got the edge, how do you follow it? How do you stay consistent with your edge? Well, that's a whole different ballgame. So I want to explain something. Going back to the technical part, if you're technically inefficient and you don't know your strategy that well, there is no use thinking, do you know what, the reason why I'm not profitable is because it's here, it's my mindset. My mindset's not there. No, you don't know your edge. That's where that part actually is true. I agree with that part that comes in. Yeah. Because imagine you're really anxious, like you start learning the Falcon system, for example. Mm-hmm. And you know a decent amount, but you're getting in too early or you're getting in too late and you keep making these errors. Yeah. It doesn't matter what I tell you about this, about yourself and say, go work on your mindset, regulate your emotions. That's still not going to solve the fact that you have a technical gap. But once the technical gap is filled, then you know it, you have the knowledge. So now let's take it one step further. Imagine you're in a situation where, right, you are technically proficient, so you know your stuff. And I think a lot of people fall into this category where they've been working on it for years, processes, routines, like everything's in place, but they'll fall into this trap where they go, right, -3. So, okay, -3%, I can deal with that. Then that goes to -4. And then they say, okay, my strategy does deal with -4. But what about when you get those periods which any great trader can experience and it's like -7? Where it's uncharted territory. Yeah. Are you still confident now?
Probably not.
Yeah, well, your edge is not going to save you at this point. Yeah. Now, this isn't my opinion, this is the data. The data shows even people for years with some of the largest prop firms where you would see that most people lose their account even after they get to the next stage. Even if they make it to a payout, they will still lose their account after about 30 to 60 days. So we have to look at two things. Either every single one of these people are technically inefficient and they fluked their way to get into the payout, which is almost impossible, or they failed to regulate their emotions, they got euphoric, and even the most technical of traders still self-sabotaged and reset everything back because of their destructive behavior. They didn't know how to damage control and weather the storm. So my argument is very simple. There are certain elements in which that when you're technically inefficient, yes, you'll probably blame your mindset, you'll blame your psychology, you'll use excuses. That's human psychology in and of itself to blame something. Sometimes people blame strategy. Yeah. You kind of get both sides to it. But if you just focused on thinking that strategy alone is going to get you there are millions of people that are competent. I'm talking doctors, lawyers, engineers, like super switched on smart people. I've coached them over the last 8 years, like thousands of people from over 180 countries. I can assure you, IQ alone is not going to get there. It's IQ and EQ. You want to be well balanced. So it is a logical argument to suggest that you need this. I'll explain it really simple. So going back to the first point before I move into this is a trading trifecta. you want to be well balanced, yes, but you need to understand that strategy alone isn't going to take you there. It's going to take you far enough because, listen, if you've got someone who's very, very switched on with the technicals, just by following the system, if they can follow the system, they might go through a period of, let's say you're not trading, this is the point, let's say you're trading with £1,000. You're technically proficient at this point, so you actually know the strategy quite well. The chances of a lot of money being involved is very low because you're trading with not that much money. So let's say, for example, you're floating £50. You're used to making more than £50 in a day, so you're not going to be emotionally all over the place, and you're going to put yourself into this false idea of thinking, well, if I can do it now, that means if someone gave me £1 million, I'd be able to make 10% on $1 million. That's not the reality. So then what happens is, you think that, well, I just need to focus more on this, more on the strategy, and then I'll be fine. And it's usually when people start scaling up or they find themselves in a situation because they're technically decent enough, they'll pass the funded account, they get to 6 figures, they might even get to $250,000, and then the real demons start happening. Then they start risking a lot less. They start risking like 0.1%, or they start risking 0.25%. They start becoming fearful of risking a little bit more because they're just not used to the fluctuations or the swings of the actual monetary amount. And that is where the internal belief system starts to come into play and all kinds of complex things. Now, because I can't approach every situation with this one size fits all, see it like this. Here's your strategy, here's your trading plan, and here is, we're going to call this MF, this is your mental framework. Call it psychology, call it whatever you want. Your goal is to get this circuit working. That's it. All of them are important. So forget about ratios, and I've spoken about ratios a lot, but it doesn't seem to go through to people. So I just want to keep this well balanced. Rather than me thinking this is 80%, that's 10%, that's 10%, forget about all of that. Let's say they were all equal. Or let's go on the other side of it. Let's say if you're someone who is a believer the strategy is the most important thing and that's it, let's say it was the other way around where this was 40, that was 40, and that was 20. Right? So let's say that is the least important of hierarchy in your mind. Even by that logic, most people focus 0% of their time on the 20%. So it doesn't matter whether you think this is more important than that. There's a 99% chance you focus almost 0% of your time on your mental framework. So you don't have the emotional regulation to stick to it. You lack the discipline to stick to it. So when you go through any periods of drawdown, so more drawdown than what you would be used to, so it goes -5, -6, and let's say you got funding there that's going to be consequential. So if you lose that, you're out, you're back to 0. You've already quit your job, you've got increased lifestyle, increased bills, or you've promised your family something, you're going to be under a whole bunch of pressure. So this is why going in with it with this mindset of like, oh, this is more important, it's a losing battle. You want to be a top 1% trader, guess what? Even if you just use your common sense, you can come to the conclusion that if I had a really balanced mind and I knew how to regulate my emotions, not ignore them, because emotions are what make us feel alive. The goal is to not be a robot. You are not an algorithm. So I've seen the best of traders that have 100% mechanical based systems. They still interfere with their trading, even when they know statistically they just need to take the next trade, But listen, when you're -11%, guess what? That messes with you. That can mess with the best of traders. So your goal is to be well-rounded, the well-rounded trader.
What would you say is the most important when it comes to prop firms? Would it be your technical edge or would it be a psychological edge?
Well, it's both, right? Because you're under pressure, you've got rules, you have different kind of restrictions than what you'd have if you had your own personal money, right? So you've got to factor that in. But then you have the side of sometimes you need to play the system, so you need to know what you're dealing with. Like for example, if I'm going to manage a trade and let's say there's a slightly longer term play, let's say I'm taking a trade from A to B, I'm playing a range. Typically, if I was to trade in that area and I'm looking for whatever continuation, here is the A to B move, for example. But if I need to, let's say, get 5% to get to the next stage, do I want greed to kick in and think, well, I'm just going to manage it all the way down to here? Or am I going to get out at, let's say, a particular inflection point? No, I'm going to close it, I'm going to pass it, I'm going to move on to the next stage and move on. So there is part of, you can't trade like a long-term trader when you're trying to scale up your capital. And I think this is an important point that people miss. I see people trying to make money on small accounts And it's the wrong way to think about it. Your goal is to get to the highest amount of capital. So what are people's problems? They're undercapitalized, they don't have enough money.
Yeah.
Because if I said to you, do you want to make 10% on 10K or do you want to make 1% on 1,000,000, you know what you're going to choose because it's completely different.
Yep.
Bear in mind, such a lower percentage, but you'll make so much more money.
Exactly.
So the goal is to not become undercapitalized. So in the beginning stages, you want to get minimum to 100K, right? Because once you start getting to 100K after profit splits, etc., that's when you can start seeing, well, do you know what? If I made 5%, it actually starts to replace my current income at work, and you can start building a real plan. Where I see people going wrong from a psychological point of view to what you asked is that they'll be trading, let's say, a 10K assessment, or it could even be a 100K assessment, and they start doing stupid things out of greed to want to make a little bit more profit, not realizing that's not where you make your money. You make your money once you've got your 400K, your 500K, your 600K. So at the beginning stage, your goal is to get the highest amount of capital in the most sustainable way. And then when you start making 5-6% on 500,000, that becomes a different ball game. The amount of people I've seen out of ego do something silly, like they'll risk more than what they normally would, and they're like 0.5% away from passing. I'll say, why did you risk? You was risking 0.5% all the way through. Why are you risking 1.5%? And they don't even know the answer to it. And these are like technically good traders. This is the point I'm making. I've met so many technically great traders that still mess things up because they get into greed or they self-sabotage. They have a fear of success. They find ways to self-destruct. If it was just like the one-off person, I'd say fair enough. No, I'm talking a high percentage of people, because chances are you get into trading because you don't like your job, you don't like your life, you want a better life, just like I did. So it means that the chances that you've had this mindset training that helps you think probabilistically, regulating your emotions, still being able to be disciplined, like you wouldn't have come into trading as a disciplined person. Not at all. So the fact that you don't have the mindset training, there's a 1% chance you had it, well, of course it's going to affect you. It just doesn't on the smaller amount of capital, but it will chase you up.
Okay, so what is coming up in part 2?
Right, nice and simple. All right, so we're going to get into some important parts. I actually think this is a hidden gem. So essentially, you want to make sure you're as close towards the middle as possible. But it's about understanding what affects you at the top, what affects you at the bottom. So let's dig into that. So if we start off at